So let's talk about that with V.Vaidyanathan, CMD of Capital First. He joins us right now on the show. Good having you. Thanks so much for joining in, Mr. Vaidyanathan. Where does your total capital adequacy and Tier 1 capital stand now, post the QIP?
See, a Tier 1 plus Tier 2 capital at the end of this transaction will be about 2,200 crores. And our capital adequacy will now increase to 23.5%. Now, in the last 5 years, we have continuously kept our capital adequacy about 20% at all points of time. I think so it is pretty healthy.
What is the kind of AUM growth you look to garner post the QIP issue? And, currently your AUM stands at close to about 11,700 crores as of the third quarter. At what level do you see your AUM going over the next maybe 12 months, 24 months?
This capital or this sort of a capital adequacy will sustain us for growth for the next 2 to 3 years, probably quite comfortably. Our AUM last reported in December was 11,600 crores. We think to grow this at 25% per year, compounded for the next 2 years, should very much be on the horizon and should be our ambition as well.
You have presence in the consumer durable two-wheeler segment, SME segment as well. How do you see your loan mix shaping up in these segments, and what's your outlook on growth in each of these segments?
See, our significant focus has been these lines of businesses you talked about for the last many years. We've been very consistent about it. We were a largely wholesale financing company in 2010. Today, 85% of the company's loan book is on consumer and MSME. And in the next few years, we continue on this strategy. Wholesale probably come down to 10%, retail probably become 90%, but clearly this strategy will go on. Number two, this is a very large space. You see any entrepreneur, any shopkeeper, any small entrepreneurs, small manufacturing outlets making bearings or any of these goods and items, if they have all need for money. And I think we are financing that space in India, which is pretty much an evergreen market. Even in large developed countries which have got per capita income of even $45,000 or $50,000 like the US, even there the MSME financing market is a growth market. So India is long, long away from there.
Take us through how quarter four has been so far in terms of disbursements and margins. Is the growth in disbursements picking up, and are you seeing margin expansion as well?
See, the fourth quarter is looking very, very good. And I think not just the fourth quarter, the whole year has been looking quite good for us. We always guide in the zone of about 23-25%, and that is quite comfortable. And as far as the interest rates have come down, yes, they've already come down twice by 25 basis points. The real impact of this will be seen in the next 12 months, actually. It's not yet translated. As you know, two banks, Union Bank of India and United Bank of India, has translated it. Other banks will probably take another 60-90 days. But it's not beyond that. It's pretty much a certainty. You can count on it. Interest rates will come down. It's only a matter of time. If you see what banks have been doing for the last few months, they have already started reducing the deposit rates. Lending rates will just follow. It's just around the corner.
And finally, how is your asset quality shaping up, especially in the two-wheeler and the SME segment? Because there has been some industry-led concern here. How's been the situation on the ground for a lender like you?
There are no concerns whatsoever on the small entrepreneur space at all, and the consumer side at all. In fact, gross NPAs, net NPAs are all well below 1%. Net NPAs are as good as nil. So really, there is no concern. I think the big issues were actually on the corporate side. That too, in the airline space, the oil space, the power space. These were the kind of things that got stuck in the logjam of the last few years and paralysis. I think it's really not the small entrepreneurs. That's doing quite well. No problem at all. To your other question about what's happening on the grassroots level with regard to growth, clearly, you can see that the auto financing market, I just read that the February sale numbers for auto have gone up by 7%. Two-wheelers are down 8%, but that's more because the rural demand has come down and there is some problem in the rural economy. But on the urban side, it's not a visible problem at all. So I think broadly, if you look at a ground level, it's only a matter of time, another maybe 6 months, 8 months, 1 year. With the interest rates coming down, GDP growth picking up, I guess good times are coming for sure.
And how do you see competition shape in the NBFC space? Any future plans for a bank license or any other inorganic plans or strategies that you may have as of now?
Well, as you know, the Indian financial services is by and large very competitive, and with the number of banks and number of finance companies, it is. And particularly in our space, yes, there is competition, financing the consumer, financing the small entrepreneurs, and so on. But really, since the market is also very large and growing, it is very much manageable. That's why I said to grow at about in the zone of 20-25% every year for the next few years is not a problem. With regard to what is the inorganic opportunities? Yes, of course, with this sort of capital adequacy, you would assume that a company will always be on the lookout, so to say. But really, we, if at all, will be interested, will be looking at small housing finance companies where we might want to just integrate with our housing finance company. But on the core NBFC front, we are not looking for anything at all.
Okay, Mr. Vaidyanathan, we leave it at that. Thanks very much for joining us and giving us that perspective. That's Capital First. The stock, of course, has been a telling story for the market. 2.5% higher. The year-to-date chart would pretty much reflect the case. 385 for this one. It's had many days of interest from investors. That's the market for the year. I was talking about Capital First. It's done well for itself and for investors. In the meanwhile,